What is a stock? A stock, also known as an equity, is a type of financial instrument that represents ownership of a corporation. This entitles the owner, you, if you own the stock, to a proportion of the corporation's assets and profits equal to how much stock is owned. Units of stock are also called shares. So why do companies issue shares of stock? And said another way, why do companies allow you or outside investors to purchase ownership in their company, and why would you want to buy some of that ownership? Companies sell shares of stock, ownership in their company, to raise money, otherwise known as capital, so they can use those funds to invest back into the company and help it grow. So let's say there's a company called Ready to Go Coffee, and they make really good coffee. The people in their neighborhood love it, but they want to expand into other locations, other neighborhoods, other cities. And to do this, they need money. They need capital. Now, they could go to the bank and try and borrow money, but that can be both challenging, expensive, and cumbersome. So instead, they decide to issue shares of stock. They need to raise $1 million to fund their expansion project, so they decide to issue 2,000 shares of stock at $500 a piece. You believe in the company, in their product, and in their mission, so you decide to purchase some of those shares. You buy 5 shares, or $2,500 worth of stock, and the expansion project goes great. Ready to Go Coffee booms in value from $1 million to $2 million, and as an owner or a shareholder of the company, you participate in that growth, meaning your investment is now worth $5,000. Now, you can hold on to that investment in hopes that Ready to Go Coffee will continue to grow, or you can sell your shares to someone else who's interested in having ownership stake in the company, realizing your gain of $2,500. Of course, the opposite could also happen. Let's say the project failed and Ready to Go Coffee is now only worth $500,000. Now your 5 shares would be worth $1,250, and you could continue to hold out hope that Ready to Go Coffee can turn things around, or you could sell your shares to another investor, realizing your loss of $1,250. Stocks are a fantastic investment instrument, and there's a lot to gain, but there are also risks, like in the example of Ready to Go Coffee. The basic rule of investing is buy low and sell high, but that can be harder said than done in certain situations, which is why it is important to be able to be selective when it comes to which companies you invest in. It's also why having an investment plan is important to minimize your risk. This is where diversification comes into place in a multitude of companies, so you're not living and dying by the performance of one company. You're not losing everything just because one company doesn't perform. Question of the day is, are there any stocks that you're interested in right now? If so, put them in the comments below, and we'll be looking forward to engaging with you in that. Thanks so much.